Block shares have been under pressure after a couple of earnings that were less than impressive. But is this drop in Block stock price a buying opportunity for long-term investors? That's what I'll answer in this video. Looking at the company's growth in recent years, evaluating its profit margins and cash flow from operations, looking at the returns on invested capital, and finally comparing all of that against its valuation on a price to earnings forward and a price to free cash flow to determine if Block is a buy at current prices. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. So the first thing I'm going to look at is the gross profit on a trailing 12-month period. And one thing to note here is usually what I'll look at on a company is revenue growth on a trailing 12-month basis, but Block is different and it requires a different approach because of the way the company accounts for Bitcoin purchases and sales. It's more informative to look at its gross profit over a trailing 12-month period instead of looking at its revenue over a trailing 12-month period. It's one of the unique companies that I approach in this fashion. Some other ones that I approach differently include Roblox because of the unique accounting of cash inflow and the way it spreads out revenue over a 24-month period. So these are some unique characteristics of Block that make it different to evaluate compared to most businesses. And looking at it on a gross profit basis, you'll notice significant growth in recent years, up to 8.9 billion on a trailing 12-month basis. You look back to 2016, and that's almost 9x or 10x from where it was back then. The company's Cash App business is growing rapidly, adding millions of new active users. That being said, Cash App is under investigation and they had to pay fines for insufficient monitoring of cash transfers and question marks surrounding how people are using that for money laundering purposes. So there are some headwinds facing its growth, but the fact of the matter is consumers like the Cash App and it's adding millions of new users and people are engaging with the Cash App more frequently. The company's operating profit margin over a trailing 12-month period is also increasing, but not as quickly as the gross profit. At 7%, the trailing 12-month margin is up above where it was in 2016, where it was nearly -12, -10%. Most of the gains being made here from late 2022 and continuing to move higher. Interestingly, Block was one of the first companies to utilize NVIDIA's latest Grace Blackwell technology to incorporate artificial intelligence into its services. And it remains to be seen how that results in increasing consumer adoption of its products. Its returns on investor capital have been similar to increases in the operating margin at 11%. That's much higher than where this company was in 2017, 2016, where these returns on investor capital were negative over 50%, closer to -60%. What I like to see from a company's returns on investor capital is, first of all, improvement if the number is low, like Block is here at 11%. It's a relatively low number. And then I compare it to the weighted average cost of capital, which for Block, I estimate that it's higher than the return on investor capital, which is not as attractive. I like to see it the other way around, where the ROIC is greater than the WACC. And what that tells me is what the company has to pay for capital, it exceeds in what it returns on that capital, right? So it's similar to evaluating a company like Walmart in how much they have to pay for the inventory that they put into the stores and how much they sell the inventory. If the company sells the inventory at a higher price than they pay for it, they're making a profit. Returns on investor capital is similar to that, although not exact. It does give you that kind of a evaluation. If the return on invested capital is higher than the weighted average cost of capital, it shows investors that the company is generating more profit than it has to pay for the capital it's utilizing in everyday operations. And lastly, I wanted to look at the company's valuation On a price to free cash flow basis of 24.5, the company looks relatively fairly valued. But when you measure it on a forward price to earnings basis of 11.4, the company looks relatively cheap compared to its growth prospects, compared to its improving margins, improving cash flow, improving returns on investor capital, and the millions of new active users and increasing engagement. This stock, in my opinion, could be trading at a higher valuation. Although it is a higher risk investment uh, correlated to the macroeconomy, the company makes significant revenue from users' activity in trading cryptocurrencies like Bitcoin. And if consumer activity is declining or if there is headwinds to the macroeconomy, those trading activities are likely to decline. You imagine cryptocurrencies, people hold cryptocurrencies when they have extra money. If people feel pressured to pay their bills, to pay their car payment, to pay their house payment, one of the first things they're going to sell, or one of the first things they should sell, is their Bitcoin holdings, because those are speculative investments they're holding in the hopes that some point in the future they can sell those Bitcoin to somebody else at a higher price, right? That's the only way you can make money on Bitcoin investment or Bitcoin speculation, is you buy today at a low price and you sell tomorrow to someone else at a higher price, right? It's not like investing in a business when you never have to sell the business and you can still make profits from owning the business. The business itself will generate profits during its operations, and that profit that they generate, they can return to shareholders. So buying a business, you can make money based on the business's ability to generate profits. But buying cryptocurrency, you can only make profit by selling it to somebody else at a higher price. So you better hope you find somebody in the future to sell it to at a higher price. I'll tell you what, it's not going to be me because I'm not going to buy it. You better find somebody else to buy it. And so that's why investors have become more concerned about Block. But I think that's an opportunity here. I think at current valuation, I like Block stock. I think it's a buy at these prices. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.